Most traders think that once they find the perfect market, the perfect setup, then the money will follow. Well, the thing about it is you can have the perfect setup and the perfect market and the perfect conditions and still lose inside of the market. I've seen it multiple times over and over again. And the truth is, it's not about the perfect market or the perfect setup or the perfect conditions. It's about the perfect execution. In this video, we're going to talk about some of the things that you can do over and over again in order to improve your execution, so that way when you do press that buy or sell button, it will have a higher probability of working out. We're going to do that by breaking down the top 3 execution mistakes and how you can flip those in your favor. So, execution mistake number 1 is basically trading from memory and not from your markups. So first of all, you should be marking up your charts. Before you even press that buy or sell button to enter the market, you should have a solid game plan, and that game plan should come from your charts. And sometimes the other side is true. Some traders may have a solid execution plan, but for whatever reason, they don't follow through with it and they buy or sell due to a lot of different reasons. Maybe they're in a Discord group and everybody's going crazy and they're buying something or selling something and you're like, ooh, I don't really trade that market, but let me go ahead and hop into that market because people are making money from that market. I want to make some money too. And I totally get it because I did it. And it never worked out. So that's why I started to really work on my own analysis and did things in order to increase my confidence in my analysis. Now I'm at the point where I'm totally confident in my analysis, and you see it every single week here on this channel. And a lot of you have said that you have made money from these setups that I provide for free on YouTube. So that is definitely amazing. If you've taken a trade and you're looking for some feedback on your trade, maybe you took a trade and it was successful and you want to know what you should do right in order to continue that success, or maybe you've taken some trades and they didn't work out and you're trying to figure out what did I do wrong and you have no one to talk to give you some valid feedback, then go ahead and check out the Express Trade Review in the comment section below, because in that I will give you a personalized review on trades that you have taken in any market. It could be gold, it could be US 30, it could be whatever market you are looking to get help in, and with that you will get my personalized review. You'll also get some tips and things that I use in order to find profitable trades. I'll show you where you could have taken profitable trades based on the setups and information that you give me. And I tend to have this turned around within 48 hours. So you could be able to use the information for your next trade. And you'll also get a PDF where I'll share with you the top 3 things that I look for every time before taking a trade that really emphasize the entries that I take inside of the market. So if you're looking for that level of help, go ahead and click in the description box below and look for the Express Trade Review, so that way you can get your trades reviewed by a professional, someone who's consistently profitable and can show you how to better enter the market with the markets that you currently trade and the current trading style that you have. I'll see you there. So back to you, I want you to think about your chart markups as basically your plan for the market. In addition to having your markups, you also want to have a solid plan. When you're going to enter, what conditions you need to see in order for you to enter, when you're going to exit, what is your take profit levels? Are you aiming for a 2-to-1 risk to reward ratio, a 3-to-1, 5-to-1, whatever that is, you definitely want to have that mapped out ahead of time. And of course, in the live markets, we may plan for a 1-to-3, but the market may only give us a 1-to-2 or 1-to-2.5 or maybe even a 1-to-1, and that's totally okay. But as long as you have that plan ahead of time, everything is going to be much better in terms of your psychology and your confidence in entering the market. So basically the way that I think of things right now is if it's not marked up on my chart, it's not part of my plan and I'm not executing on it. So basically you need to have that same mindset when you enter the market or before you enter the market as well. So execution mistake number 2 is rushing the entry. So a lot of times, I know for myself in the past, I've seen the market, let's just say I'm looking at gold and the market may spike up. There's a huge bullish engulfing candle. I was looking to take a buy anyway, but the candle was still open and I entered the market anyway. So even if you have the perfect setup, you could still fail in your trading, unfortunately. But the way to flip that around is to understand that good setups don't just appear in the market, they unfold. So a lot of times if you're clicking through the different time frames and you see how the candles unfold, you see how the candles build up into a setup that you're looking for, then that gives you clues as to whether or not it's time for you to enter the market. And one of the things that I like to use is basically just hopping from time frames to time frames. So there's entry time frames, and that's basically anything that's underneath H1. Sometimes I will use H1 as an entry signal, but most times it's going to be H1 and lower. And when I'm looking for my setup to appear, I'm looking for those candles on those lower time frames in order to understand how that setup that I'm looking for is potentially ready to pop. So sometimes I like to trade the breakout, and going to those lower time frames can give you those clues. And other times I like to trade a break and retest, where I'll just let it go ahead and play out, and then so I'll wait for the breakout to happen, and then after the breakout, I'll wait for some sort of retest. And if that retest gives me signs and wonders that price is going to continue in the direction I want it to go into, then I may follow along and enter into that trade. So I'll always ask myself, has price done what I needed to do? If that answer is yes, then I'm like, okay, great. Do I see my entry signal, whether it's a closed candle? I'm always waiting for closed candles. Sometimes I will enter on a live candle, but it usually has like a 50% chance of working out. But I'll wait for a closed candle. Do I see a wick rejection that I'm looking for, a pin bar, or some other signal? Are we at a strong key level? So all these different things in my mind have to play out before I enter the market. So if you're looking for a way in order to have a game plan in order for you to enter the market with confidence, then go ahead and check out the 5-minute fast track guide, where basically I run you through all the steps and all the things that I think about before I enter a trade. You can get that in the description box below. It's totally free. So execution mistake number 3 is actually exiting the trade way too early. So of course there may be times where you want to exit the market early. Maybe you're satisfied with the profit. Maybe the market has gotten a little too crazy for your taste and you rather just take the money and run. I know I am a fan of both of those things, but sometimes when I've taken trades and I look back at my trading journal, I notice that, oh, well, price actually wasn't as crazy as I thought it was. When I click to this other time frame, price looks perfect. When I click to maybe a lower time frame, like the M1 time frame, price looks a little crazy. So when I go back in my journal and I look at those things, it's basically stuck in my mind for the next time. And that's something that I want for you. So I want you, before you actually take a trade, to take a screenshot of all of the time frames, every single one. I usually start with maybe like the H4 or the daily, and then I go all the way down for the other time frames that I use, and that's typically going to be my analysis time frames, which are H4, H2, H1, and then also some entry time frames, and basically all those other time frames that I may use underneath H1, and just have a screenshot. I've created another community here on School called Consistent Profitable Traders, and if you want to join, you can go to school.com/traders in order to join this free membership. I have a number of things here inside of the community. You can see that the community is growing. There are people being added almost every single day. And then inside of the classroom, I do have some things here. I'm constantly adding new things, new resources for new traders. And if you go over to the calendar, then you'll see that I have a monthly call with everybody inside of this group. So if you want to join this community, go ahead and go to school.com/traders, and I'll see you there. So this is where I'm getting this information, where basically I'm doing the same thing when I'm entering, and then I'm also doing the same thing when I'm exiting as well, just so that way I can have that record, and then I can compare those screenshots. And then that's how I learned that I was exiting trades way too early. Even though I was satisfied with the profit, I'm always looking, well, how can I do better? And one of the ways to do better is actually look at those screenshots and make sure that you are paying attention to market structure. And if market structure looks crazy on one time frame, let's just say it's looking crazy on the 15-minute time frame, then go up to the 30-minute time frame, or maybe even the 45-minute time frame, and just see how price looks. And if it looks clean to you, or if it looks like you can understand the candles and the market structure on that time frame, then use that as a time frame in order for you to gauge whether or not you should get in or out of the market. So I do that a lot, and I'm always going through time frame. So when people ask, what time frame do you enter on? It varies because I'm literally looking at all of the time frames to see which one in that moment for that market on that day looks good for me in order to enter the market. And once I find it and I'm comfortable with it and I see my entry signal, then I'm entering the market. So I said a lot there, but basically this is all to help you become a much better trader and also look at how you entered and how you exited, and that will help you be able to hold on to your winners a lot longer. Because I noticed earlier in my trading, as soon as I see a little bit of profit, I could be just above break even, up taking a profit, and then I'm exiting, and then the price goes and shoot up 400 pips on gold, and then I'm like, I only caught 20 pips. And you know, at some point that was cool because I was trying to get comfortable with that market. But once I start seeing that I was consistent with 20 pips, 30 pips, 40, 50 pips inside of the market, I started to go for higher pip amounts on the gold market. And it doesn't matter if it's gold or whatever market you are on, but for me, this is how it was. And I noticed that I could hold it longer, and I just kept doing that gradually. And that was something that helped me to hold now to 100 pips, 200 pips, 250 pips, 300 pips even. So those don't happen all that often, but it's great when it does because now I know what to look for in order to be able to hold the trade for a longer period of time and maximize that trade. And that's the same thing that I want for you, which is why I came up with this list of execution mistakes for you to review and use for your own trading. So just to reemphasize, it's not just about the market or the setup or anything like that. It is about your execution. How well you can execute the trade is going to determine how profitable you are when the market goes in your direction. And I want you to be separated from those people who just analyze charts and people who are actual traders where they analyze charts and take trades. And hedge funds have people inside of the hedge fund called quants, or they're quantitatives, where basically they just analyze a whole bunch of data. They may analyze charts, but they don't actually take trades. And I don't want that to be you. I want you to be the one who analyzes, know what they're looking for, and can enter the trade with a lot of confidence and success and continue to grow that success over time, which is why I make these videos. So if you want to see more of what I was talking about inside of this video in detail, go ahead and check out any of my videos on this channel, whether it's a trading breakdown where you can see where I've made up to $15,000 at this point on the gold market, a $7,500 trade, a $2,000 trade, or even like a $500 trade. You can see all of that on this particular channel, so you can get an understanding of how I executed on those specific trades. So you can also see how I mark up my charts in any of the videos where I talk about US 30, gold, NAS 100, USD, JPY, and a whole bunch of other markets on this channel. So that way you can see exactly what I'm looking for before I enter the market. And then, like I said, get a sense of what I do when I've executed the trade and have taken a profit. So if you have made it this far inside of this video, I want to congratulate you because a lot of people will not stick around for this type of information, and I've given away so much in this video already. I want you to comment the word setup inside of the comment section below, and I will see you in the next video.